Well, folks, Wall Street is flipping faster than you can flip a flapjack. This is absolutely amazing. At the top of this video, we're going to talk about what's going on with Wall Street. These price targets for the S&P 500, what they're up to here, the FOMO that's going on and just starting, and what's going to transpire here, why this matters for the market. So we're going to talk about that at the top of this video. Then we're going to talk about some stocks in this video. I got to talk about Meta, Amazon. Palantir is really showing a lot of weakness over this past month. We're going to talk about Palantir in this video as well as the Adobe deal that's not going through for Figma now. We'll speak about that and talk about if that's an opportunity to buy Adobe stock. I appreciate every single person for being here, folks. Thank you for being here. Thank you for smashing that thumbs up button. Thank you for being subscribed to the channel. There's so many people debating whether the Fed's going to cut next year, how many times they're going to cut, recession, stock market crash, stock market's going to boom, right? You're hearing so many conflicting things, right? Harry Dent, crash of a lifetime coming, all these different things, okay? So I said, let me put together a full-scale video this weekend that goes all in depth on kind of my opinion, how I'm going to be investing in 2024, given everything that's going on out there. So if you want access to that, I can email that video over to you tonight or tomorrow. Just enter in, there'll be pinned comment down there. And yeah, because it's a confusing time, okay? And these Wall Streeters aren't helping the matters. Here's the deal, okay? I posted this. This was just last week. Literally just this time last week, I posted this in the breadcrumbs tab inside the prep stock group. I said, everybody, another year where the most prestigious Wall Street firms are going in bearish. And these were the price targets that these folks had on just this time last week, okay? Goldman Sachs, 4,700. Wells Fargo, 4,625. Barclays and Morgan Stanley, 4,200. JP Morgan, 4,200. Or excuse me, 4,500. Barclays and Morgan Stanley. Okay. Now here we go. Goldman Sachs sees S&P 500 hitting 5,100 in 2024, boosting their forecast. They just had their forecast last week at 4,700. So this isn't even like this is a small tweak. This is like monumental. This was expecting a flat stock market next year. Now suddenly they're expecting the stock market to be up substantially next year. What a flip. Goldman Sachs raised its 2024 S&P 500 price target by 8%. 8% to 5,100, forecasting tailwinds for the U.S. stocks from falling inflation and declining interest rates. Unlike 2023, when the so-called Magnificent Seven group of mega-cap growth and technology stocks had powered the majority of the year's advance in the S&P 500, the upcoming gains in the stock market will come from cyclical sectors and companies with smaller market capitalization. Now, let me push back against that for a moment. I think it's very important I push back against that. Let me almost take the bearish side of this whole thing, okay? Because they mention cyclical sectors, and they also mention small caps, okay? The important thing to understand about small caps, which by the way, I'm bullish on small caps for next year, but with that being said, remember, small caps in terms of their weighting of the S&P 500, extremely small, okay? The S&P 500, when you look at the weighting of how it's really done, it's the big dog companies. It's really like the top 20, 25 stocks that dictate whether the S&P 500 goes up in a given day or not. The other 475 stocks are so, I don't want to say, they're almost so insignificant, just to be honest. Those big dogs are the ones that move it. So if Apple and Microsoft and Nvidia and those stocks are moving, S&P 500, boop, 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 boop. If those stocks falter, then you're talking about it ends up bringing down the entire S&P 500 because they're such big weights. And then not only are they big weights to S&P 500, but you've got to understand in these other indexes and the way these other funds are done, if one of these stocks weakens, then like for instance, let's say Apple. If Apple stock is weak, guess what else happens? It hits the semiconductor stocks. The semiconductor stocks all get weak. If the semiconductor stocks get weak, it hurts the Qs. It hurts the NASDAQ. If the NASDAQ gets hurt, it hurts the other big techs. It all feeds on itself, okay? And a lot of it comes down to the biggest. And that's why I'm not necessarily super bullish on the indexes for next year. But I am very bullish on certain stocks in the market for next year. And there's a big difference between that, okay? Also, cyclical sectors, I don't know, that's a little up and down. And commodities could affect a lot of things when it comes to that. Looking forward, the new regime of both improving growth and falling rates should support stocks with weaker balance sheets, particularly those sensitive to economic growth, the firm wrote. Federal Reserve Chair Jerome Powell said last week that the U.S. Central Bank's historic tightening of monetary policy is likely over as inflation falls faster than expected, and that a discussion of rate cuts in the benchmark is coming into view. Coming into view is not now, okay? Let's just put it that way. So I think that's very important. Goldman strategists expect the Fed to cut rates by 25 basis points at its March, April, and May meetings I think that's a little, to just be expecting them already to cut in March and then April and then May. I mean, it's a potential, but it's like, come on, man, like, let's chill a little bit on the whole rate cut fantasy here. Like, them cutting rates is not usually a good thing. It usually means bad things are about to come shortly after that, followed by quarterly cuts that will bring the benchmark rates down to a range between 4% and 4.25% by year end from the current range of 5.25 to 5.5. Benchmark 10-year treasuries will likely end 2024 yielding around 4%, close to their current level, the bank said. Falling rates will push the S&P 500 2024 forward price to earnings multiple to 19.9 from its current 19.2, the firm said. Ooh, okay, interesting, very interesting, right? Now, so Goldman Sachs, here's the deal, okay? Here's the deal. And we're going to look at some of the most bearish Wall Street firms out there and some of the most, in just a moment in time, to talk about what those will mean to the market. But what does it mean when somebody like a Goldman Sachs today says, you know what, 4,700, I know we were at that last week, but no, we're going 5,100. What does it mean for stocks? What that means for stocks is you see a short-term pile-in into many of the biggest stocks, ultimately. That's what you actually see, because when you got to understand, people make trades and decisions based upon what Goldman Sachs says. I don't think it's right, but it's what they do. So Goldman Sachs says, hey, S&P actually is going to have a good year next year. We thought it was not going to have a good year, but now, we changed our opinion since last week, and now we think it's going to have a good year. People go out there, including high net worth individuals, other firms, and they say, buy up stocks. But where do they really want to put the money? They really want to put the money in the biggest, most comfortable stocks for them. And so that's why you can see stocks that were performing very well were some of the biggest big dogs out there, right? The stocks that everybody really wants to be in, the Nvidias, the Metas, the Amazons. Look at those sorts of stocks today. Look at those stocks' performance. It was tremendous, right? Because Goldman Sachs says, hey, it's going to be a good year next year after all, right? Now, you look at somebody like a BCA Research, they're very bearish on the market. They're talking about S&P 500 going to 3,300, which is obviously would be a huge stock market crash. Let's just call it what it is next year. They say a recession in the U.S. and Euro area was delayed this year, but not avoided. Developed markets maintain a recessionary path unless monetary policy eases very significantly. As such, the risk-reward balance is quite unfavorable for stocks, they say, right? So this is somebody that's insanely bearish. What happens if all of a sudden they flip over to the bullish side, right? Like somebody that's insanely bearish, or let's say they just go neutral, and they're like, you know what, I think we're wrong on our 3,300 call. We're just moving to 4,800, 4,700. What happens there, right? JP Morgan holds about as much weight as anybody. In my opinion, if you're talking about who does everybody really pay attention to the most on Wall Street, it's always Goldman Sachs and JP Morgan. They always carry the most weight. And it's very important that Goldman Sachs just went bullish now on stocks, and JP Morgan is bearish on stocks. JP Morgan is saying the S&P 500 is 4,200. What? I will say this. I think there's a high probability in the next 2 weeks that JP Morgan flips. A high probability. Not a guarantee. I would say a high probability. What happens if JP Morgan just goes neutral? I'm not even talking bullish. I'm not even talking about puts a 5,000 plus price target. What happens if they just go neutral, right? JP Morgan said high equity valuations, high interest rates, and a weakening consumer, rising geopolitical risks, and a potential recession give little confidence that stocks will move higher in 2024. We expect a more challenging macro backdrop for stocks next year with softening consumer trends at a time when investor positioning and sentiment have mostly reversed, says Marko Kolanovic of JP Morgan. Now, what's interesting is, I reacted to a video on the Reaction channel. This was a few days ago. And there was a woman on there from JP Morgan Private Bank. JP Morgan Private Bank is a separate division from JP Morgan. Think JP Morgan as Chase, the masses. Think of Private Bank as super high net worth individuals. But the interesting thing, listening to her, she didn't sound so bearish on stocks for 2024. And so it was very funny listening to the woman that is so important with the private bank side, having such a different opinion than, let's say, some of these folks that maybe speak more to the masses. So I just thought that was very intriguing, because it almost sounds to me like those two sides don't agree. They don't agree, okay? So if JP Morgan even goes neutral, you got to understand that's huge for the market. They don't even have to go bullish like Goldman Sachs just did, right? Morgan Stanley is, they're not even neutral on the market. They're negative on the market. Let's call it what it is, right? S&P 500 price target 4,500. Morgan Stanley expects a flat stock market in 2024. That's not flat. We're at like 4,700 right now, 4,700 plus. This would be a down market. But see some pockets of the stock market perform better than others. The extremely narrow leadership of mega cap tech stocks is likely to continue early next year, but eventually break down according to the firm. The question for investors at this stage is whether the leaders can drag the laggards up to their price level performance, or if the laggards will eventually overwhelm the leaders' ability to keep delivering in this challenging macro environment, Morgan Stanley said. We think these dynamics are likely to persist into early 2024 before a sustainable earnings recovery takes hold. We ultimately see 7% earnings growth for next year, right? Now, here's the problem with Morgan Stanley, and this is a huge problem, right? Is Morgan Stanley and their big dog there, Mike Wilson. He was, I reacted to videos last year, and if I recall, he was predicting something like, if we go about a year ago or back or so, if I recall, he was predicting around 3,000 or 3,200 for the S&P 500, 12-month price target, right? Obviously, we're ending the year, let's call somewhere between 4,700 and 4,800. So Morgan Stanley, Mike Wilson, they were completely wrong, right? They know that, right? Now, if he's going in this year bearish as well, right? If he's wrong again, that would mean 2 straight years being wrong, which is not going to look good at all. You know, 1 year people say, okay, 1 year. You're wrong 2 years. You can't do that. You can't do that in the public eye like Mike Wilson is in Morgan Stanley, because they're a very influential Wall Street bank. If they're wrong 2 years in a row, that's a bad look. So my thinking is, I wonder if they're going to cave at some point in time, especially if this market continues to roar higher. I do wonder if they're one of the last to FOMO. I am considering that. And the reason being is they could start really feeling the pressure of like, oh my gosh, if we're wrong again a second year, what are we going to do in that situation? Maybe we got to jump to the bullish side. And that almost is a little desperation. So we'll see if they stand by their guns in this situation and keep that 4,500 call. But I'm just telling you, the more this market rolls, the more I think eventually they have to cave and say, you know what, we're flipping over the bullish side. No, I was looking at Morgan Stanley and Mike Wilson and kind of what he was saying here, and it just doesn't make a lot of sense, to be honest, okay? He says consensus earnings estimates falling for the fourth quarter, okay? I think earnings are going to be strengthening quite considerably, so I wouldn't worry too much about that. Strategist says a rebound likely in the second half of 2024. So he's expecting a bad first half of the 2024 and a great second half of 2024, which is, the same prediction people were making last year, and they got wrong again. It was actually the first half of the year where a lot of our gains came. Second half of the year was kind of meh. It was okay. Second half of the year, okay. But it was really that first half of the year when no one was expecting, greatness that we got a lot of the gains, right? So I don't know if I'm so confident in this. I'm a little more concerned for the second half of 2024, to be honest. Because let's say, hypothetically, the Fed does either start cutting in the springtime or summertime, right? Generally, after those cuts happen, you see the market actually start to move down many times after the cuts have happened, right? Because everybody's already priced everything in. It's kind of a buy the rumor, sell the news type situation. When it actually comes, if anything, it disappoints people and it actually starts getting people very concerned about, Fed's starting to cut rates. How long until the economy really tanks? How long until unemployment, ticks up substantially and earnings get hit? So I am actually a little more concerned about that for the second half of 2024. And then the election, still nobody's talking about the election. Dude, I'm telling you, this is going to be the craziest election, in my opinion, likely the craziest election we've had. I can't even think of a crazier election, just to be honest. This is going to be insane. Are you kidding me? With all the Biden stuff going on, with all the T-Man stuff going on. Like this is going to be insane. I don't even think people are even thinking about the election yet at this point in time. And I'm like, that's all to play in the second half of the year. Do you know the type of volatility that we could see in the second half of 2024? So I don't know. I'm not super confident about that. I'll hold through that time period like I always do, but I'm just telling you, I'm not super confident in that time. Let's just put it that way. That's going to be craziness, right? Now, why don't I put out a S&P 500 price target? That's out for 12 months like these Wall Streeters do, right? And I think it's a fair question. And I'll put it to you like this, okay? First off, I don't even put out 12-month price targets for the stocks I own. I don't even do that for the stocks I own. I look at it very simply. This company's undervalued or fairly valued. I like it for the next 5 years. I think its net income's going to this range. I think its revenue's going to this range. I think they're going to fend off competitive threats. I think they should be trading around this forward PE in those years. I play a very simple game. I like its income statement, balance sheet, the management team, and I make those moves. I don't worry about the 12-month price targets on it. At the end of the day, these 12-month price targets, it's a clown show. Just to put it quite frank to you guys, it's a clown show. It's all you're setting yourself up for is a clown show, trying to predict where the market's going to go in the next 12 months and have these price targets and things like that. It's a clown show, man, to make your investment decisions based upon that. Here's the factors you have to, if you are going to make a prediction on where the S&P 500 is going to be 12 months from now. Here's just some of the factors you have to factor in. You have to factor in the earnings for all 500 companies. No one can do that. No one knows the earnings of all 500 companies because no one can track accurately 500 companies. It's hard to even do that with 10 or 20 companies. Never mind 500. Come on. Then you have to understand the weighting of each company in the index and how all those weightings can change based upon other stocks going up and down in other, let's call it indexes or ETFs as well. Then you have to consider how each stock will perform, literally how each individual stock will perform, because that's gonna change the weighting in a huge way and whether the market goes up or down, the S&P 500. Then you have to understand how the U.S. economy will do in each sector, not just in general, each sector, right? Because we've kind of seen a rolling recession the last 2 years. You got to understand and predict how the economy is going to do in each sector. Then you got to also predict how the Chinese economy is going to do. Then you got to predict how the European economy is going to do. Then you got to predict what the Fed will do. Then you got to predict what the IMF will do. Then you have to predict what other central banks will do. Then you have to predict how U.S. elections will go. You're also going to have to predict how international elections go. You're going to have to predict how investor confidence will go. You're going to have to predict how many will rotate different money to different places throughout the year. You're going to have to rotate black swan events. Or did I say rotate? You're going to have to predict black swan events. You're also going to have to predict geopolitical events. You're also going to have to predict what OPEC's going to do. And a whole lot more than that. And so this is why it is a clown show to even try to predict a 12-month price target on the S&P 500. Because no one knows all that stuff. No one, okay? It's what I'm in the markets more than probably just about anybody in the world. My whole life revolves around the stock market. Thinking about stocks, looking into stocks, what's all these different people's opinions. Oh my gosh, watching CNBC, hearing about all these different Wall Streeters, looking at what the investment banks are saying, looking at what the Fed's saying, all this stuff. And I'm just telling you, you can't predict all that. It's too much. So to try to predict a 12-month price target, it's a clown show, man. It's a clown show. It's pointless. You're just going to look bad in the end. And the one time you look good, it's not enough to offset how many times you're going to probably be wrong in the price target. Tom Lee looks very accurate this year. Look at last year. Was he accurate? No, he was off by 1.5 miles, right? Mike Wilson, maybe he looked decent in 2022. This year he looks, kind of clownish, right? So that's that. People say retail sheeps. The real people that are sheeps are Wall Street. I'll just be honest with you guys. Those are the real sheeps. These guys and gals follow each other all around, and if they're all of a sudden going all bullish on a stock or bullish on the market, they all start one by one, boop, 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 and then they all go bearish, doo, 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 and it's like a little domino train. Like retail, I look out there and I see a lot of different people with a lot of different opinions, a lot of different favorite stocks, a lot of stocks they don't want to own, those sorts of things. We look at Wall Street, I'm like, those guys and gals, they go very consensus. And then if they all start to FOMO in, at the same time. It's a crack up, man. That's where I see a lot of the sheep activity. So the bottom line is if we're going to continue to see these big prestigious Wall Street firms over this next few weeks continue to go to that bullish side and bring up those price targets, which they kind of need to set those very soon here, in terms of trying to make it a little more concrete numbers, even though they'll probably change them as the year goes along. They've got to do it very soon. And if they do that, you'll see more and more Santa Claus activity. You'll see a more rolling market for the next several weeks if more and more of these Wall Street firms jump bullish, firm by firm by firm, right? So just a little food for thought there. It's intriguing times. Now let's talk about a few stocks, okay? Meta stock, is showing back to strength. That one was kind of weakening a little bit. Now it's going back to strength. It was up almost 3 percentage points today. You know, you really think about a Goldman Sachs starting to go more bullish on the market. And where's a lot of Goldman Sachs type clients? Where are they going to want to put money? They're going to want to put money in the strongest companies out there. By the way, we just hit a $400,000 plus gain now in Metastock. Woohoo! That's awesome, man. I just noticed that there. That's awesome. They're going to want to position into these sorts of stocks, right? It just is what it is. They'll say, oh, great balance sheet, great income statement, strength in the stock, and strength in the company. It's exactly where they want to position into. They know the company well. It's not really like a question mark anymore like it was at this time last year. It's where they position into. You look at somebody like an Amazon, right? Back to strength in Amazon. This stock was up nearly 3% here today, up $4,300. Amazon's another perfect example. Goldman Sachs says, go buy stocks. We're going up next year. The clients say, yes, sir. And then what do they go do? They go buy Meta. They go buy Amazon. They're going to want to buy the strength of the strength. That's where they're going to want to position into, right? Look at an elf on the shelf here today, right? Another strong stock I had, up $3,400. By the way, flirting with a 2,000% gain now on elf on the shelf, right? And so what does all this mean? What does all this bullish activity in these sorts of names mean? It ultimately means he's here. Santa Claus, he's here, right? He already came early for us, but he's here again for us, okay? And this stage of Santa Claus we're in right now, this is the Wall Street stage, where, and when I say the Wall Street stage, what I'm talking about now is the firm side of Wall Street. Before it was kind of the hedge fund side, getting ready for the Santa Claus rally. This stage we're at now in the Santa Claus rally, this is the Wall Street firm side. This is the Goldman Sachs style, move. Let's just call it that, okay? So very intriguing. Now, I looked at a stock like Nordstrom, right? And this stock's now up almost 20 percentage points just in the past month, right? And so, if you watch a video I put out about a month ago or 2 months ago, I showed you guys what stocks do the best, what sectors do the best around this time of year. And one thing we found is retail usually performs tremendously good this time of year, right? And so look at a Nordstrom, up nearly 20 percentage points. That's going to eclipse any of the stock market indexes in the past month. Pull up any of the stock market indexes the past month. This eclipses it quite significantly, just to be honest, right? And so, that's where you see a lot of strength. Also, what did I show you guys? I showed you small cap season is usually December through April. There's usually a huge seasonal flow into small caps. Now, we're probably on the juice a little bit in regards to small caps right now. And the reason being is not only are we, basically entered in very recently a very strong seasonal pattern for small caps, but on top of that, you have so many folks that want to start to position into small caps that haven't been positioned there for years and are starting to buy in, right? And you have somebody like a Tom Lee out there predicting small caps are going to rise 50% roughly. 50% roughly in 2024. And so people are going to try to position into these more and more and more over the next several months. I don't think this is just some short-term phenomenon. I think these stocks will continue to likely roll for the next several months. They'll have a pullback here and there, but ultimately the trend will be up probably until, let's call it March or April, sometime around then, when the seasonal pattern usually starts to slow down for small caps. And then sometimes in the summertime, they'll actually start to show weakness overall, right? You look at a stock like Revolve, up almost 23% in the past month. Is there anything that exciting happened with Revolve in the past month? No, not really. But this is at the cross sections of retail and small cap, right? It's a small cap stock, which those show strength in this time period, and it's retail related, right? I mean, that's perfect, right? So it's almost like a cross between a Nordstrom situation and like an Honest situation, right? The difference is obviously an Honest went from a situation of, people were thinking bankruptcy to now people are thinking no BK and profitability at some point next year, right? Which is a huge different situation there. Palantir is showing a lot of weakness. I mean, this is the weakest stock I probably hold the past month. Palantir is down nearly 17 percentage points just in the past month. So what is going on with Palantir? What happened here? Like, why is, so many stocks showing so much strength, and you got stocks all over the place up 20%, 30%, 80%, and 50%, 100% in the past month, and then there's Palantir down near the 17%. Okay, first things first. Palantir's performed tremendous for us. I mean, even after this weakness in the stock the past month, which is not a small weakness, 17 percentage points roughly, is a lot. It's still up a ridiculous amount. It's still one of the best stocks in the entire stock market this year, right? But let's keep in mind, S&P 500, people are looking out and they're saying, where's this S&P 500 inclusion at? When are we getting in, right? So it's lost some momentum there. It's just completely lost all short-term momentum. I'll put it like that. That's the best way I could put it with Palantir. It's lost all short-term momentum, right? All excitement around kind of the business model. You had the Wall Street analysts De Palma, right, who put out the note around they might receive less from that government contract, which is, once again, it's kind of small money compared to what Palantir brings in overall, but still, it just puts a weakness out there. It just puts a, kind of like, just gets zaps like the momentum from that stock, right? Now, with that being said, Palantir could easily come back in terms of stock price. And it really has nothing to do with the market in general, right? Really what needs to happen is either they need to announce some sort of big deal that people didn't see coming, or they need to have like their next earnings needs to be really strong and showing an acceleration of growth rates, really strong guidance, something like that. If they come in with either of those situations, you'll see that stock start to come back to life very, very quickly. But for right now, it's lost its momentum on the Wall Street side. It lost some momentum on the retail side. And so it's just kind of floundering and just dropping right now, okay? And so it depends on if you have a long-term view. If you have a long-term view of Palantir, you're probably loving this and picking up shares. If you have a more of a short-term view, you're kind of like, this could persist maybe for the next month, unless we get some month, if not month and a half, unless we get some big announcement of a big deal here for Palantir overall. I put out a full-scale video reacting to another gentleman's video earlier today. If you didn't get to see that one in the reaction channel, definitely check that one out. It talks a little bit about Palantir's business in 2024 and beyond, and some of their competitive threats and things like that. So if you didn't get to check out that video and you're interested in Palantir, definitely check that out, okay? Adobe, this was huge news, I thought, here today. I was like, this was like the seventh thing I think I saw listed on CNBC, and I was like, this should be number one. Adobe scraps $20 billion acquisition of Figma. This is huge. Companies couldn't see a clear path to receiving regulatory approval. Now, this is kind of sweet for Figma, because Figma gets $1 billion from Adobe since the deal didn't technically go through. So that's awesome. That's kind of awesome for them, to be honest. But they scrapped it, because regulatory, it's hard to get these big deals done right now. Really, really difficult, right? It's just not a favorable time for deal making in terms of a big company buying out a potential competitor. And so, do I think Adobe stock's a buy, even though this deal didn't go through, right? One thing, and what I'm hearing out there, okay, is, so this deal was announced years ago. Years ago, it was announced that this deal should have happened, right? Or Adobe was going to buy Figma. It was years ago the announcement came out. So there's talk that Adobe really doesn't need Figma as bad as it did several years ago when this announcement was made. And so I look at that and I kind of think, okay, maybe, just maybe, Adobe doesn't really need Figma that bad anymore now at this point in time. Maybe they have somewhat competing services, and maybe they got more products coming that are going to be even more competing services. And so the need to part with $20 billion and still continue to go through huge lawyer fees on this regulatory side to try to do this might just not make sense for them anymore. And they might say, let's just keep this $20 billion in-house. Now, keep in mind, some of the deal, from my understanding, was going to be cash. Some of it was going to be stock. So it was going to come with dilution, right? And so Adobe stock was actually up very nice today. And I think Adobe shareholders, if anything, are happy the company gets to keep money in this time period that we're in right now, right? Now, Adobe's been a phenomenal performer over the years, 22,000% CAGR. Holy smokers, that's no joke. The valuation on Adobe's a little rich, but it's always rich. I don't remember ever looking at Adobe stock really and the valuation not being rich. If you looked at a trailing 12-month P and a forward P, it always trades rich because it's one of the best companies in the world, right? And so it kind of deserves that, and it's got a recurring revenue stream and things like that. And also, they've done a great job growing that bottom line over the years, right? If we go back about a decade ago, this company is bringing in about $290 million a year in net income versus $5.4 billion this past year in net income. And they should be bringing in $1.5 to $2 billion in net income a quarter now at this point in time. So they should be making anywhere between $6 and $8 billion in net income over the next few years. So that's pretty tremendous. That's pretty tremendous. And so Adobe's just kind of a beast. Is a company a buy? Sure. Is it the greatest valuation ever? No. But the truth is, with companies like Adobe, every major dip is a buy in those stocks. The stock's always a buy. There's no time period I could really say other than maybe that peak in 2021. And by the way, in another few years, that peak might even look like a buying opportunity as well. Every time this stock had a peak or a trough, it was always a buy in regards to Adobe. So is this situation any different? Probably not. Probably is a buy as well, okay? Appreciate y'all joining me as always. Don't forget, pin comment down there, get access to my video, how I plan to invest in 2024. I record that this weekend for you guys. I can send that over to your email either tonight or tomorrow. Get free access to that. It should definitely help you out down there. Much love and have a great day.